What is up, everyone? We are now into week 2, and we're going to put another $20 into this account, divide it up, and review what we did. Again, I'm not licensed to give you financial advice. I'm simply just documenting what I'm doing with my own money and putting this out there for educational purposes. Do what you want with this. Let's dive into today's video. So before I add money, let's review the account. So we're going to set it to a week. And we made 30 cents last week. We're up 1.51%. That's pretty good for just a week of trading. And you could see really, it was from June 2nd. So really less than a week of trading. Okay. That was three days basically. Pretty good. Obviously, this doesn't mean we're going to be green forever. Things go up and down, but hopefully we compound enough so by the time everything does go down, we actually don't go below our beginning balance. And that's the power of compounding and keep putting in money over and over again. So let's add in $20. So now the deposit's going to take a couple days, but we do have instant deposit available. So we're going to get that $20 of buying power right away because, well, I have margin on this account, and now we're at $40. Let's go and invest. So first things first, we're going to do SPY and QQQ. Same thing we did last week. So we're going to do another $10 in SPY. No, that's fine. All right. Again, let's review the 5-year plan with SPY. Currently at 596. That's 96% up in 5 years. Pretty good return on your money. And if you do the max run for, what is this, 25 years, 339% on your money. Pretty good. I also want to dive into the stuff down here. So you could see the stocks that are in it. This is the top 10%, basically 35% of the weight of this index is coming from these 10 stocks. So you could see it's NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet, Class A, Class C as well. So we own Google and Apple separately. Meta, Tesla, Berkshire Hathaway. Those are the top 10 stocks. Okay. So now let's go to QQQ. And I'm telling you, this is investing. Super boring. Just look at the data. 5-year, we're up 128%. Go max time for the last 25 years. We're up 517%. Pretty good. Again, guarantee that we're going to do that again in 25 years? We don't know, but it's a good sign that this is steady and rising. So if we go back down, these are the top 10 that are 50%. And you can see it has the same thing, but they're just weighted differently. NVIDIA, Microsoft, Apple, Amazon, Broadcom, Meta, Netflix, Tesla, Costco, and Alphabet Class A. So you can see it's a little bit different. There's some new stocks in the top weight, but a lot of the same. And this is what I mean by diversifying. We're just spreading our money across different baskets. So depending on what goes up or down, we should have a general upward trend across everything we're investing, even if some things are struggling right now. So we're going to put $5 in on QQQ. Now we're up to $10 here. We're up to 20 in SPY. Now, I am going to put the same amount in Apple again. Apple is at a good spot. So what I like to look at is, this is a good learning lesson. So on the 1 week and 1 month, you could see Apple hasn't really done anything. We're kind of in like this sideways trend. And we have been going down from the peak on May 13th. So this is a good time for me. I believe Apple's going to keep going up. So we are at a cheaper price than what it was in this last month. If we go to the 3-month, same thing. We're at a cheaper price from March 7th to today. So this is a good time to buy because it's like on sale. It's discounted. So I'm going to do the $3 again on the Apple. Now we're gonna introduce you to something new right now, and we're gonna go into some more dividend talk, and basically a stock that pays you out for holding it. Again, Apple gives you 0.50%. Not the best, right? So if we go to, I'm gonna cut the video here because I gotta remember what the symbol is. So what I was looking for, I couldn't get out of Robinhood, so I use this site, stockanalysis.com. Going a little deeper, but again, I need you to play around and start to learn yourself. So VIG, we have a dividend yield of 1.78%, and you can see the dividend history here of how much you make per share. Again, it's not going to be much when you're only putting in $5, $10, $3. But the more you put in, the more this starts to compound and grow over the years. So the other one I wanted to look at was SCHD. A little cheaper, higher percent, and you can see the dividend growth. And again, slowly pays out more and more over time. So we're going to go with SCHD. This is the Schwab US Dividend Equity ETF. So again, we're getting a basket of stocks. And if we look at the 5-year, we're going to get some growth in it. Nothing too crazy, but there's still growth in this ETF. But we're going to get those dividends paid out and it's going to compound. So we're going to put our $2 in here. Oop, not 200. We're going to put our last $2 in here. And you can see on here, Verizon, Coca-Cola, Altria, Cisco, Lockheed, Conoco, Phillips, Home Depot, Texas Instruments, Chevron, Amgen. These are just the top 10 holdings, but you can see how we're starting to diversify across different stocks without thinking and trying to buy and research all these different stocks. Again, in the future, we will. So now we're done. Let's go back to our home page. That's our $20 this week. We are now $40 in this account. And if we go back to the week, obviously we cut our growth down because we added more money. But once this plays out, we'll start to see the actual growth when we check back in next week before we start our next video. You can see the market's pretty sideways right now, which is also a good sign we're getting in at a good time because, again, our research has led that these are going to go up in time. So times when it's down or sideways is a good time to buy because we should be running up after that. So don't get scared if it's not moving. Don't get scared if it's going down. Mentally, we know 5 years, this should be going up. So we're calm, cool, and collected. That is it for this week. Again, we'll check back in next week. Another $20, more investing. We'll put more in SPY, QQQ, and SCHD next week. And we'll see if we want a different stock or if we just add more to either Apple or Google. Depending on what those stocks are doing at that time, we could decide which one we want to purchase next week. So if you're new to investing and you have not set up, link down below. Get signed up on Robinhood. Also subscribe. We're starting to shift from day trading to investing. We're going to do a lot more investing knowledge and training, and hit that thumbs up. And if you have any ETFs, mutual funds, stocks, indexes, dividend paying stocks, comment them down below. I'm interested in what you are all have your eyes on, and who knows, maybe we'll add that into this portfolio. As always, have a good day. Peace, everyone.
Like and subscribe.